Hi there folks, welcome to this week's weekly report, weekly outlook, trade ideas. It's Monday the 8th of February. Okay, so on the heels of last week, we had the non-farm payroll report. That's basically the job numbers in the US. And the numbers came in slightly disappointing in that they were expecting more in terms of job creation in the US. However, the US dollar continues to grind higher. It is indeed one of the strongest currencies out there at the moment. I'm going to tell you why that is. This is a chart showing you the US government 10-year bond yield. And you'll see here, this was basically just in fact after the US election. You had the yield there down around 0.95%. Then you had the Georgia elections, basically giving the Democrats control of the Senate. And since then, the yields have been on a rampage higher. Now we're basically up there at 1.20 almost. That's almost 0.25% interest rate rise in the bond yields in the last month or so. So why is that important? Well, clearly it's important. If the yields are going higher, and if you're an investor and you want to invest to get those higher yields, you have to buy the US Treasury bonds, yeah? And to buy the US Treasury bonds, you need to buy the US dollar first. So consequently, as the yields push up, as you can see they're doing at the moment, the US dollar has a tendency to push higher as well as investors look to take advantage of those higher yields. And if you look here at the DXY, this is the dollar index. It's basically an index pitching the US dollar against 6 other major currencies, of which the euro is the main component after the US dollar. Basically, I think it accounts for about 2/3 these days. But this is an index showing you the strength of the US dollar. And you can see the pattern is very similar to what I showed you there on the yield curve. So the US dollar at the moment showing some real good signs of strength. And that could be the play for this week as well. Certainly as you see that the US is coming out of, not coming out of I would say, but certainly seeing a reduction in the COVID cases and indeed fatalities. So reasonable good news coming out of there as well, and stimulus packages as well all seem to be there supporting the US dollar. Let's have a quick look then what we're looking at this week. We're looking at buying the dollar against the Japanese yen. We're targeting here 106.60. Okay, so that's basically our trade in the spotlight. Buying the dollar, selling the Japanese yen. The Japanese yen has a tendency to be a softer currency when times are in risk on. If you look at the stock markets at the moment, stock markets are very, very buoyant, very well bid. And as the stocks go higher, typically the safe haven currencies like the yen, the Swiss, they tend to come down. That's basically what's happening at the moment. I'll show you that on the momentum meter in a moment. Okay, also we're looking at Aussie New Zealand as another pair in the spotlight. We're seeing this down, coming back down to the 105.60 level. We've had this pullback coming into some resistance. We're expecting that to roll back. Is in fact one of my trade picks for last week. Still have an open trade in that at the moment. So we're looking at a short trade in the Aussie against the New Zealand dollar. Of course, all three of us here, we all have our individual picks as well. I am still selling the euro against the British pound at the moment. The UK does seem to be rolling out the vaccines at an alarming rate, certainly surpassing what's going on in major parts of the world, certainly more so than in Europe. And the thought is basically that we may see a recovery coming sooner rather than later in the UK, and that is showing support going into the British pound. You know, the ECB, that's the European Central Bank. They're basically talking down their policy, their currency as well. So as we're seeing the euro weakening, we're expecting to see the pound benefit from that weakness. And indeed, as the US dollar goes stronger, the most actively traded currency pair on the planet is the euro against the dollar. Normally, when the US dollar goes higher, the euro gets affected to the downside to a bigger degree. So we're looking at the euro pound against the euro. Also, Max here, he's looking at buying the US dollar again, so another dollar weighted buy trade here, and he's selling the Norwegian krona against it. He's looking down to see the supply zone there at 8.64. Okay, and he's also looking at some retest of the 50 EMA, that's the exponential moving average. And Mr. Varco, Paul, looking this week, he's also looking at a euro dollar sell trade, basically with the same bias there involved. You've got the Biden administration forced to put through the COVID relief package. Of course, you can discuss all these opportunities with us in the trading room should you wish to come over. I think there'll be a link down here somewhere you can come and join us. So he's looking at another challenge down there at the 1950 level. We've been rolling off that resistance zone up there at 120, 121. And that does seem to be the momentum at the moment. So he's looking at a euro US dollar short. Now, I'm not quite sure how anyone can trade the Forex market without looking at something like this. It basically tells us which currencies are strong and which currencies are weak. Now, as a trend follower, I like to buy the strong currencies and sell the weaker currencies, and I don't know how you can follow the market without looking, as I say, at something like this. So here you'll see the white line up here. That is basically the British pound. The white line, the keys there on the left there. You've got the New Zealand dollar up there. That's the grey line, and of course the green line there is the greenback. That's why I've called it, coloured it green. Basically, it's the US dollar. So you'll see those are the strong currencies at the moment, and the weaker currencies are basically the Japanese yen, the Swiss franc, and indeed the euro. Also note here, these currencies moving up. That is the Australian dollar, that is the Canadian dollar. Both of these are commodity currencies. They are getting stronger. As the markets are moving on to risk on, that basically means people are taking on more risk, these commodity currencies tend to do better. And that's exactly what you're seeing at the moment. So you can see here, this is risk on. Oil prices are going through the roof at the moment, which again is another reason why the Canadian dollar is being well supported. So that's basically the strength meter showing you that the strong currency is the dollar, the weak currency is the euro, and indeed the Japanese yen. Okay, so this week, weekly releases, not too much out this week. Normally is the case following on from the non-farm payroll report. We've got the Fed monetary policy, that's the FOMC minutes later on in the week. A couple of central bank speakers as well, they're always important. You've got Lagarde speaking in the ECB, and you've got Bank of England, Bailey speaking there as well. We also do have retail sales out later on in the week out of the US, and also we've got Australian unemployment later on in the week. So we will be paying close attention to those. So if you want to come and join us inside the trading room, I'd like to see you there. Make sure you come over and say hello. Say you come over from this video. I can roll out the red carpet for you. We discuss these opportunities and many, many more. We are streaming live 7 times a day around the clock, looking for trading opportunities, discussing market events and so forth. So if you're inclined to do so, come over and say hi. If not, have a good week, and I'll see you next week.